Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex Weekly Charts and Analysis. It is September 7th, 2021. Happy New Year for many of you out there. You may be like, what? What? Yes, it's the Jewish Happy New Year today. I don't know how to say it. I don't want to butcher it out there, but I do know it is today. And the reason I know is because my two sons start school tomorrow. So it is party time tonight, bedtime at like as soon as I could get them to go to sleep tonight. Tomorrow is the first day of middle school, so I'm pretty excited for that. It'd be nice, again, daughter's not back yet tomorrow. They have 2 days in a row of stuff, but yeah, woo! Middle schoolers back to school, love it. Freedom. After a year of Zoom school, I am ready to go. I'm sure many of you out there are in the same boat as I am. So, with that said, let's jump into today's presentation. For those of you that don't know me, as I mentioned, I'm the president and CEO of Keep Trading Simple. I've been doing this since about, not for Nadex, but I've been trading since about the 1999, the Y2K timeframe. Seeing a lot of ups, downs, sideways markets. Started as a retail trader like many of you did. I'm not a 12th generation trader. My dad was actually a programmer for IBM. I started with traditional stocks and options like many people do. Realized very fast that there was other alternatives out there that actually no one ever told me about that were, in my eyes, better. So I ended up going through those. About 6 years into it, I found the foreign currency market, fell in love with the year-round, or I'm sorry, not the year-round, the basically 24-hour nature of it. Thought it was great. Loved the idea of leverage. I ended up finding futures a few years after that. Spent some time traveling around teaching people how to trade the markets. I did actually go on the inside. It's kind of like like just that check for like, I don't know, almost like the dirty past, right? I used to work for one of the big three advisory banks. Learned very, very fast. It was nothing like what I thought it was what I assumed that it was. It was great for my education personally because I learned a lot about the bonds market. So, every so often I'll switch over and look at bonds and kind of see the relationships. And really, it was an arena that I had zero experience in. So it was great. I knew that the trading the income side, but bonds, I had no idea. And I had no idea how much control they actually had. So, it was a positive experience. But I left and came back out again and decided that my true passion was really teaching people how to do it for themselves. Right. Not, never wasn't a big fan of the, give me your money, I'll do it for you. No, so I'd much rather empower you, so that's what today is about. I'm hoping that, every single week, my goal of this is that you guys get one additional kind of golden nugget of information, whether it be some type of setup that you like or something about a product that you didn't know about before that Nadex has. But every week, I want you guys to take something from these presentations. Right now, I can use that picture for about another month. We have 4 weeks to go. We are now 35 weeks. I know we're like doing the countdown, right? We only have a couple weeks to go. I think my wife would be happy if, we made it to like 38 and then the new boy came. He's already getting big and she's already getting super uncomfortable. So pretty soon I'm going to have a new one with, the little baby in there. So, I do stay busy. I don't, glue myself to the computer for 18 hours a day staring at charts. If you're not using technology, things like alerts, you're doing it wrong. So with that said, let's dive right into our agenda for today. Because we are talking about charts and money and risk and things like that, we do have to go over the Nadex risk disclaimer. Now, trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost at the end of the transaction, including fees. Now, you should carefully consider whether trading in Nadex is appropriate in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and none of the material presented herein is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. All right, now that is all out, let's go through and talk about our agenda. Now, this week's a little bit weird. Obviously, having a Monday holiday always kind of really throws a lot of things like it makes things a little bit crazy. Reason why is because you don't have your typical Sunday gaps. Your Monday volume is extremely low. It's easy to move the markets around. And overall, there's just not many economic news releases. As you guys know, we'll cover the calendar in a second, but even things like crude oil inventory reports, they get bumped to Thursday instead of Wednesday. So it does kind of change around the entire market a bit. But what we'll do first is we're going to look at the calendar. And what we're going to do is look at the upcoming news events. Okay. Reason why we look at the upcoming news events is because they tend to provide a catalyst for market movement in a short period of time. Okay, I know that's a mouthful. Reason why? The reason why we're talking about it is because the market adjusts very, very fast. The news. There are pre-news strategies. There are post-news strategies. You guys know that we do. I guess it's. I would say it's probably more than quarterly, but it's. I want to say it's quarterly. If you guys aren't already registered, on September, what is it, 21st? Yeah, September 21st, we have our next commodities and kind of really it's commodities and gold, but we have another education summit coming up. And one of the things that I'm talking about, I'm actually going in the first window, the 11 a.m. Eastern time. I'm going to be talking about how to trade oil and really natural gas with news. Okay, we have oil and natural gas inventories every single week. The same strategy that I use to trade those two, you can actually use with currencies and indices and even stock. Really stock and options, you could use it as well. So, there's a broad number of things you can actually do with the same strategy. And that'll be September 21st if you guys are there. But we're going to cover the upcoming news events. Then we'll dive into the indices. Now, I will tell you, Tuesday trading on a week where there is a Monday holiday is always kind of strange, right? There's a little bit of carryover. And again, the negative sentiment that's out in the market right now is kind of what we had at the end of last week. And it's almost like, I hate to say this, but it's the picture that's being painted for us right now. I don't know that it's justified, right? I feel like we're holding on, but I'll tell you what I mean by that when we get into that section. But we'll cover indices, and then we're going to cover forex. Now, forex this week I would say, presents probably the most opportunity. Okay. Now, if opportunity is not your thing and you don't care about getting additional setups, then you can kind of skip the forex section. I'll tell you right now, almost every country this week has their monetary policy statements. We've seen some countries already starting to get to the stage where they're raising interest rates. Others are in different stages of talking about tapers. It tends to move the currency market around a lot. Okay. So there is a lot of opportunity because pretty much everybody this week is talking about it. And again, not many rates rising, but talking about tapering and what their economic forecasts look like going forward are affecting gold and oil. So, I mean, there is just so much linked to the currency market right now. And then last but not least, commodities. And I just mentioned gold and oil. We'll kind of check those charts out. As I said, inventories got bumped back, so we actually have gold and natural gas. Remember, we're doing hashtag natural gas $2 is what we want because I need to refill some tanks. I don't like the 440. But yeah, both those are on Thursday this week, so we'll talk about those. And then also gold. This week will be interesting, and there's a very, very big number on Friday for gold. The PPI month over month. It's still positive. Right, it's still forecasted being positive, so that it's not quote transient the way that I see transient. So I don't know, we'll see. All right. With that said, let's dive over and go right into kind of the news. 1 sec, let me grab a drink. I'm paying for yard work here. My allergies are I have allergies in the spring and the fall, so if you guys hear me cough or take a pause to grab some water, it's did a bunch of yard work over the last 2 days, and fall allergies are not my friend. So in the last 24 hours, because again, we do have to do the 24-hour mark. It is Tuesday, not Monday. You can see the dollar CAD is the big winner, right? Going up 91. And it's basically showing more or less CAD weakness, although we are seeing, and again, you can see that right here, CAD underperforming ahead of quiet BOC meeting. I would say right now it's kind of it's a combination of things. It's kind of the perfect storm of dollar strength / CAD weakness. 92 is a pretty big bit of movement. And if you look compared to everything else, what else do we got? I mean, we got the pound yen over here, the beast over here at 1, right, in 24 hours. Euro pound is coming back. This was actually higher. This was up about 35 earlier today. Aussie dollar had some disappointing news last night, so that one is also kind of disappointing storm. And then you're seeing everything else. I mean, we had the euro dollar down a little bit, pound a little bit more, pounds had some weakness, dollar yen up a little bit, dollar Swiss up 28. So it hasn't been bad, right? We had some economic sentiment numbers this morning that were pretty negative. They were already expected to be lower, but they were like twice as much, right? They expected to drop it by 5, and they dropped it a lot more, over 10. So that's not necessarily the best sign. It's probably why gold is doing what it's doing as well as oil today. Going into tomorrow, okay? So first things first, we have the BOC rate statement, okay? There's some overnight rate. The rate is not changing, right? I think that's pretty much the consensus at this point. IVPMI, again, it's kind of one of those. I mean, if you want to click on it and learn about it, you can see it's a purchasing managers index. Anything above 50 is considered expansion, not contraction. And it is actually supposed to go up, so it is kind of a positive sign. It's a little bit more positive. And then we have the JOLTS numbers. Some people like the JOLTS numbers, some people don't. I would say, I'm probably more currency trader than I am indice. The indice people seem to like it because they feel like it's like, oh, this is an inside report, right? JOLTS, right? I can say that JOLTS job openings. Woo, that's a good one, right? Some days it depends on what really else is going on. But right after that at 11 o'clock, we have the UK, the Great Britain, the Great Britain pound, monetary policy report hearings. Now, the pound is already kind of getting beaten up. We've already seen some data from the pound. We had Saunders actually, talk earlier this morning talking about the level of GDP is now probably fairly close to pre-pandemic levels. So the UK is saying, hey, we're back, baby. We're back. Well, here's their monetary policy coming out. We get to hear that and kind of look at that tomorrow and kind of see what they're thinking about forecasts. And he made some interesting comments. Now, where is it? Here. His view is to ease off accelerator rather than apply the brakes. And I kind of try to translate this, and I'm just assuming that I translated it correctly. What he's saying is he is for tapering, but not for raising interest rates, because raising interest rates is the kind of halt inflation. He's just talking about kind of easing off, so it's kind of like backstopping is kind of what I think that again, this is my UK English to American English translation here. And I think that's what he's trying to really get at here. But again, everybody's in at some stage of tapering. So with that tomorrow, this could be a pretty nice mover. And then we have, bond auction and Williams is speaking. Thursday, we got all kinds of stuff going on. Thursday, we have the monetary policy and the refinancing. They're not expected to change, but what they say in the monetary policy statement about easing could actually be a big mover for the euro dollar. If you don't know, and again, I know some people are like, I don't do currencies. The euro dollar is the most traded asset in the entire world, more so than the SPY. Okay. If you guys didn't know that, the SPY is the most popular option that exists. I think it is number 2 right behind the euro dollar as far as, sheer numbers. I'm trying to think. There may be actually on pure dollar amounts, there may actually be one of the currencies that is above that as well. But euro dollar's number 1. SPY is, as far as options go, it's the leader, it's the king. It's right up there. But monetary policy statement could be big. With the ECB press conference, and why the press conferences are important, it's also coupled with unemployment claims. The statements are already kind of written, right? Everybody, they're done ahead of time, right? In the press conferences is when people get to ask questions. Okay. The questions is where you may not have a scripted answer for it. And that's where people are like, haha, I gotcha. So that tends to be where there's a lot of movement. Plus it's at 8:30, plus there's unemployment claims. So, right now you can see there's a big, a red and an orange. That's screaming euro dollar right now, right? To me, when I look at this, I look at 8:30 release. I see euro, I see dollar, I see press conferences, I see, people not having any idea what's going on. We see unemployment claims that were, coming in about right. I see 8:30. I'm looking at 8 to 10 binaries right now. That's the first thing I'm looking at right now. Okay. And again, we can't do it today. It's Tuesday, but for Thursday morning, that it just screams binary trade. Okay. Then at 11 o'clock instead of 10:30, we have the crude oil inventories like we do typically talk about tomorrow. And then we have Macklin speaking, right? Again, this is basically their pal is Macklin. Okay. So yeah, it's already getting kind of crushed today, right? And Macklin speaking on Thursday at noon. So again, another one of those potentials for big movement very, very fast. So you got to watch out for that one, right? And then we have Bowman speaking. And I don't know, it's Bowman. FOMC voting member, January 2034. So Bowman, I guess, is one of the newer. I'm not familiar with Bowman, but again, Bowman is Michelle Bowman. Looks like she's going to be around for a while. So we'll get to know Michelle. And then Friday, this is where we have that big number coming in, that PPI. Okay. Now, again, if you're not familiar with PPI, CPI, all those things, it's basically PPI is the change in the price of finished goods and services sold by producers. So basically what you and I pay for, right? It's still expected to be up, not at the same rate that it was last time, but it's still expected to be positive. So again, the transitory inflation thing that was supposed to end in July and August, now we're in September, and yeah, transitory is supposed to be like a wave. It comes and then it goes. To me, it's coming and it's still coming. It's just slowing down a bit. So I'm not sure when it's going to go negative. But yeah, with people getting paid more money, I don't think that they're just suddenly going to lower the prices on us. So I think this inflation is going to be here to stay. It's just the way it works. But we also have CAD data. So we have the unemployment change and the unemployment rate expect to go down by 0.2. That gives us a lot of potential. Now, with Nadex, again, this is a double release, a dollar CAD, 8 o'clock. Again, this is going back into those short duration binary contracts, going from the 8 to 10, right? Because it's kind of like a bam bam, kind of like a bang bang with two different big news releases. And again, all red, all red, all red, and then the core is orange, but again, it's linked with a red. So it's a red release. For people that trade externally as well, I mean, you could go across and look at this one in the dollar yen if you want to kind of trade it just purely on a Canadian based level versus a dollar CAD. But at Nadex, you're doing it with a dollar CAD. All right. But look at it right now, today, dollar CAD is the monster. And look at this. This is up 93. And for the last hour, it's been doing nothing but retracing. So just goes to show you how much power in the last 24 hours has come out of that dollar CAD position and how much opportunity. All right. So with that, let's dive over and let's start looking at the indices. So let's take this down to a 15-minute because that's how we analyze our indice-based trades. We can see that right here is the European session, right? Not too much going on, but you can see it's in kind of this yellow area. This was an old area. Sellers that came up and based in it again and then spent a lot of time. We call these an area of interest. They kind of act as magnets for price. And you can see at about 7 o'clock this morning, we touched it. And again, this 8 o'clock window, this is kind of where the U.S. trader was coming online. The opening 9:30 is like right in here. 8:30 is where futures traders are getting on board. It got negative very, very fast, right? Very, very fast. Here's a level from last week. We talked about this 54.13. If we continue it across, you can see that really at the 10 o'clock, not so much the 10:30, but kind of at 10 o'clock, we had slammed right into that level. Now, if this had been like a Monday, okay, this would have been a prime reversal area. Being that it's a Tuesday, that there was kind of some market movement. I mean, you can see there's movement in here. It did stuff, right? It was a great target for short, and this is that negativity that I'm talking about. When in doubt, just blame it on Delta. Seems to be what we're hearing. Doesn't matter, right? When in doubt, blame it on Delta. Now, this hasn't moved. It needs to go, a little bit higher to be able to get to its 1 to 3. And this is something that we kind of had on there from before. Whoops. Let's go long position. Right there. Hold on, I'm going to take it to 3. Right there. So got a little bit more room to run. I would say right now, if we're able to continue to kind of push forward, we've kind of touched this level, and there's not really a whole lot in this morning kind of session here, right? Really the morning push from 7:45 to 10, that 3-hour window. So it's really, really close at this point. It's a little bit late to get in, but the reversal in this one would have come in either 10 or about 11:15. So there's been some options in there. What I would say right now, I mean, there's really not any horrible news today. I mean, if you look about, what we have for the rest of today, there's not really a ton here, right? I mean, what else is really going to move this? I mean, there's nothing here till about 7:50, and it's all yen information, right? GDP, final GDP, current account, bank lending. I mean, there's no U.S.-based data left, so not too much there. It's been overly negative. Everybody that was getting short is now kind of, messing around with this one. I would say right now, it's probably, in my eyes, more set up for, what's going to be easier. It's probably going to be easier to continue to go higher. Could we retrace and basically come right back up to that same level and just close more or less flat on the day? Sure, we could. I mean, as far as the ES is right now, it's down 0.3%. Right. So, I mean, it's not a ton. And if you look at since we opened, the open was right here. We're only down like this little tiny bit, right? We're down from, I guess here's the 931. It's only down that far, right? So, I would say right now, my opinion is, yeah, it looks like it can go higher. I think based off the rest of what we have for the week, I think getting back down to 4,500 is one of those things that's on the radar. I would say at this point, this level, we've hit it here and it's gone to full profit. We've hit it again. It's gotten close. We've hit it again. So right now we have a 3 times touch through this level. I'd be a bit more cautious at this point. And I think if we end up breaking through, we got about 9 points worth of drop to get back down to 4,500. Let me see. This is something we want to take again. I'm looking at this, and I'll tell you exactly what I'm looking at here. I didn't see it on the 30-minute, but I saw it on this one, so I wanted to point it out. We got one there, we got one there, and then we got a racetrack lower. Okay, so interesting scenario here. And you know what? We'll pull this across. There's some buyers in there, not the best buyers, but okay. All right. So we know that this is the 4,500 level. Let me put a price tag on there for you, make it a little easier for you guys so you can see it. All right. So we know that 4,500 is going to be a psychological number, right? If we are able to push back up again, I think we can today, but I do think that we kind of roll back over until we have a bit more positive news. Whether in the overnight tonight or tomorrow, I think this comes down. I think the media is just way too big on Delta. They just have to drive the Delta, variant down our throat, and then the subvariants and Mu and everything else. It's easier to sell that than it is, being, looking at the actual rates. I think we come down, and I think we have some basing around 4,500. Now, 4,500 is backstopped by 44.96 and 44.92 at two small levels, but then we got a pretty nice size gap here all the way down, and it's about 16 and a half points back down to the 44.76. If we can base in this area right here, right, between 4,500 and 4,503, if we get some basing and a push down, these are the two potential levels that pops up to grab that level. I think we look for 44.76. I do think this week, especially seeing the inflationary numbers, I do think that this has potential of going lower. We saw it kind of roll last week by seeing some of the other numbers. But again, if people aren't working and the inflation is still going higher, again, not really necessarily the best situation. And again, maybe Bowman, starts to make a name for herself and really is starting to push this to the downside. So, yeah, I'd say watch for that. So, green for the rest of today, but after that, I think we roll down. We base at 4,500 with an overall target later on this week at 44.76. Now, NQ is delayed. So NQ, we had a couple different areas, and we talked about it before. We hit here, we hit it again, and again, kind of came higher and pushed lower. These were two from last week. Right now, today, here's the 9:30 candle. So right now, here's 9:30, and we've only moved about that much. It's kind of chopped down, and it kind of found some buyers, although, in reality, yeah, there's buyers there. Here, I'll take this one out because that one is out. I can put that across. It's fine. These buyers here is kind of what it ran into. And I'll tell you why that they turned here. You see how there's a wick here and then a wick higher and then a wick higher? It's kind of one of those telltale signs that there's buyers in there. And that seems to be what it rolled off of this morning. Would I have taken along from that? Probably not. It's an area, like I can tell you exactly why I did based off of this thing, symbols, but is that where I would have taken it? Probably not. But I know why I turned there. I can, again, you can justify it. I would say at this point, again, we already know we have selling. We've seen this kind of peak through a little bit. I think we make a little bit of an adjustment in the NQ just to bring it more recent. Again, over the weekend, you always have to adjust things a little bit. I'd put a level in up here about 15,698, maybe 15,700 is a little easier. That's probably where I look for the next short. And again, if we continue to push up, right now you can see NQ is following what we were talking about with ES pushing higher. Question is, does that roll at the end of the day? I don't think so. Let's see, 1, 2. I'm almost wondering if I'm going to use that for long. Let me see, how big is this? It's 11. Now I'm curious about this right here. And you guys know what this is called. This is the Yield Hot Harry Potter, right? And the reason why is just where we are. This has been rallying pretty much since 11 o'clock, since about the 10:15, 10:30ish, we've been rallying higher. I like the fact that it's pushing. If it can get some help, and if we can get ES to roll and flip positive on us, that could lead us into kind of like an end of the day, kind of really, strong push. And remember, anything about Delta staying home. God forbid if school systems. Maybe wait, did I miss it? Did the school system shut down yet? No, just the Delta divide thing. I was gonna say, God, if they're closing down schools again, all those are good things for the NQ, right? Because if we're forced to go back to Zoom and use technology, go back to those services again. That's all great for NQ. So, look for a break of 15, 7, 10, 25. Look for a little bit of base, look for a pullback, and then look for that one to go higher with potential targets up into the 15,743 level. And again, particularly if we can get ES to roll and turn back into the green, I think that's a pretty decent runner up top. Now, YM is the exact opposite. While NQ benefits from, again, technology, remote working, all that, telecommuting, the YM is the exact opposite. The YM is kind of like the old school, let's drive to work, let's build manufacturing, let's get it at, like, of the trading world, the YM is the meat and potatoes, right? Right. They're not the fusion restaurants, right? With the molecular gastronomy. That would be more the NQ. This is kind of old, and you can see we had this Harry Potter trade set up last week, and we were looking for a collapse at 15,200 to drop down 70 points. We'd used that level in the past, but it had been hit a number of times. It just sliced through it like warm butter. I mean, literally from the 930 candle, which is right here, it never even pulled back. It just sliced all the way through. And we had targets down at 35,000. And you can see since really about 10 o'clock this morning, we've gotten really, really choppy back and forth. So again, if you were able to get that when it came through, awesome. This is kind of where your starting level would have been, but this was also that 7 o'clock in the morning kind of rollover today, right? Basing here and kind of tested it, right in this, price pullback and sellers stepped in. So could you have gotten this one? Sure. This was probably a candidate. It's hard to check now because it's moved so much, but this was probably more of a candidate. I mean, 242 is basically what is a little bit shy of its ATR. This would have been a great candidate for one of the knockouts early week, right? Because we were sitting back here. Yeah, we were sitting back in this level up top. Yeah, this one's screaming knockouts. I was off. I didn't check it, so it wasn't my thing. But yeah, this would have been a great mover. Now, unfortunately, 35,000 was where we were looking for that thing to take a bounce off of, and it did it a little bit early. And now we put a lower. We've had a pullback, and we now have a higher low. So is it going to kind of put that retracement in? Yeah, it could. Obviously, this trade is no longer good, so we'll take it off because it got sliced through. But I would say watch out for this level sitting right in here, 35,200. It did get sliced through. And again, that could just be because we had one day of holiday. Everybody had to get in. It's like, let's get it to where it needs to go. That was an old area. And again, these areas being violated tend to come back again and again in the future. So while it's not necessarily a position I'm looking at right now, if we get some basing around that, right, around the 35,200, that could be the potential next short area. And actually, you know what? Let me try. I'm not going to do it from the top. I'm going to do it from this last push. Let's see if there is going to be a fib trap sitting in there. Let's do percentages, labels on the right. Yes, there will be. So if you take this morning's push, right? And again, I can use body to body. I'm just using wick to wick right now. You can see that old level is literally slicing right down that 50. Right down that 50% mark. So will there be fib traders out there waiting for a pullback to that level to take profit? Yeah, absolutely. So keep 35,200 on your radar. And again, I know I don't have it up here right now, but I could do this one and turn it like purple so it's a little different. And you can see kind of where the risk level would be for a lot of those traders out there. All right. So keep that on your radar. Russell. Come on, you can load, Russell. There you go. Russell's like, I don't want to do it. I'm embarrassed. So Russell, late last week, we saw this area where we punch. This trade is still valid. We are still waiting for a break of 23.11. Well, 23.12 because it's 23.11.9. It's not there yet. So again, it is an if this, then that based trade. Today, all we did was really kind of whipsaw back and forth. You can see the volatility in this one, but we're really still kind of just going in the same channel. You can see there was some buyers in here, and that's kind of what we hit first. And then there's a little bit of buyers down here, and we ran into them. I would say the next real clean level for this one is going to be sitting down here at approximately the 22.61 level. It would be a target. So for shorts, we'll turn this green. The green with the black is kind of the target. I like this short. I think this is there. Again, the reason why is the Russell tends to react faster. Any type of negative news, oh, the economy's not doing good, we're going to start closing back down again, Delta's getting worse. Those are all things that tend to be bad for the Russell, right? Um, Again, everything's looking good. The economy's rolling. We're hiring people back again. That, again, the JOLTS report actually will help the Russell because again, job openings. It's not the large companies; it's the small companies that people are looking at. So again, that could be something. If we drive down to this 2261 and the JOLTS report is coming out, you could put something on the smaller time frame, maybe even a call spread on the Russell. That could be something to get into. But I think 2261 is a big telltale sign. If we continue to drop all the way down, it's got to go another what? We've got 10, another 18 points lower. This one, again, looks to me like it wants to kind of take off. I like the ES. I like the NQ higher. YM is kind of stuck. Russell doesn't look so promising. But Russell can literally turn on a dime when it needs to. There's a small level sitting right here. Piss off those wicks. So got a little bit more room to run. All right. Look at this. Gold. Wow. Gold is under that 1800, man. Whew. Look at that. It's like foreshadowing what's going to come next. All right, so let's go to Aussie dollar. So Aussie dollar, you can see, has been pretty much inside of a kind of downward channel. Let me get off the 15-minute because that's way too small. But you can see more or less it's pushed lower. It's pushed lower. We had one little target down here. And again, this was a target level. It's in black. This is a level we were looking for. And you can see it kind of hit it and pause. It hit it, pause, and now it has kind of turned. Again, we want to make sure that we are out before those reversal areas. Right now, I would say that a lot of this is probably more following gold than anything else. The news last night out of Australia was kind of just it was kind of just blah, right? Nothing, crazy. But with gold dropping, I mean, if gold is actually beating silver on the downside, being down 1.58, Aussie dollar is following gold, and we're seeing dollar strength kind of across the board. So, I would say, this is an old area of interest where we came back down and touched it and went higher. It was really the profit target for the short. But if we draw a new level from that area, because it was a decent push, I would say this one has room to run, at least down to, I'm just going to take this one and I'll bring it across. And let's go green. 73.61. Would probably be the next level where I'd be, it's a decent level where I could see some buyers coming in. And again, based off the formation, we had a base, we've had a pop, we based above it, and then we had a nice little explosion. It was kind of a little bit early for a European release, but not bad. Man, where do we take this one? Short. When we got one up top. I don't really love a lot of those. I mean, they're literally just pops up and down. Hold on, I'm checking another platform I have. It's a little bit different charting. I want to see if there's like a hidden candle that I can't see. I'm wondering if it's going to pull it here. Is kind of what let's see. That was a European Open, so that could be a potential short. Let me see. No, it's not marking it. I would say, let's see. I'm going to put one right there. Let's see. Non-Aussie. No, Aussie doesn't have a bunch, so it's going to be more dollar based. So I would say, let me see, how far is it? It's about 35 pips up. It's an okay level. I mean, it came up, it based in one candle, and then kind of pushed back down again. I mean, if you're looking for a pullback, it's probably a potential area. I'd say that's. I mean, I'm not really interested in anything else in here. I would say watch out for that one. If we can get a kind of a session open trade, whether it be in European session or even maybe Aussie session tonight, but there's not really a whole lot of news coming out of there. But yeah, I would watch those two zones. Set alerts. I don't love either one of those two. I think the 73.61 is a little bit better. Big shorts, I like the 75.25. So I'm sorry, 75.23 or 75.24. Have that one there for later in the week. And again, watch the trap at 74.79. Okay. There's a trap sitting right there. Yeah, that's probably the best little buy option in there. Let's see if we got anything over here. Yeah, this one missed it by a little bit. So we had this trade last week that we ended up pulling back. And again, Harry Potter trade. We came up, we based, we pulled back, we grabbed it, went all the way through, came back down, grabbed it again, went back up again. So I mean, it hit two different times in here for the same trade, and actually hit it a third time. So, again, there, there's one. There's number two. There's your number three. Okay, they're there. So at this point, I wouldn't be using it for longs anymore. I would be swapping this one around. Again, I like the 8126, but it's kind of been front run twice here, so you need to be a bit cautious with it. I would say, really, because of this spike, there's nothing really clean on this one. So I mean, this one's going to be pretty easy analysis here. That 8207 is our top side, and right now bottom side is kind of bracketed off at 8126. Do be cautious with this though, because it has hit twice. If you need to go to a smaller time, or a little bit farther of a drop, it's not fresh over there. Let me try something real quick. Let's see. That's only 23. No, I wouldn't mess with that one. Yep. So I'd look for that. If we do have a break, again, we have a potential area to come on, kind of come all the way back down again with eventual targets, even actually down here, down at 8060. That's what we were talking about, the break of this level. So that's a decent push. I would say this Harry Potter here is good, right? Plenty of room for that one. And again, we may even have the same scenario sitting right here. Okay, so there's kind of two of them, right? And again, I'd watch for this level right here, right? And again, it's right at the very, very end, so we're kind of good for either of those two. All right, that would be a break of 8119 and a breakdown here of 8053. Okay, Euro pound. So look at this. This is kind of crazy. So look at this. We had basically one daily ATR worth of movement in just the European session. And then the U.S. trader stepped online really about 8 o'clock, 8:30. And really, it's probably more profit taking than anything else. And it's driving it all the way back again. So eventually, we kind of drew this earlier that we expected this to push back down again. It already kind of helped us. I do think price comes back down to 85.66. I think the UK making statements that basically saying that our GDP levels are up to what it was, pre, right? I think that's a great comment. And I think a lot of people are not giving enough, I don't think they're putting enough weight into that one. But I would say, negative at this point. Again, we did kind of break higher than the 86 level. Here was the trade from last week that we had talked about last week's session. It did go higher, so we could technically mark this top off. It does have descending candles, so it is a level that, we could kind of mark it off here. Actually, I'd probably use the entire. Let me see. It's about 5, yeah. So that's probably a decent level for tomorrow. In all reality, I'd like this to come down. I would say watch this one for later in the week because we do actually have a bunch of European data. So tomorrow, nothing crazy, but Thursday, monetary policy press conference. I think that's going to be a big day. So we'll see where this one goes. But just watch those two levels. Right now, I would say we can probably move this. We don't need the 86 anymore. That trade's out. We do have that area of interest. Basing. Yeah, so let's watch out for. This could be a potential area if we can rally back up to that for the news on Thursday. And like I said, I don't know. I don't have a crystal ball. I don't know if it's going to go up there. But if we get up to the 86.18 for the monetary policy statement, I like that one for short as well. But we're kind of smack right in the middle right now. It's kind of boring, but I look for that one to drop. Euro yen. Euro yen is sloppy. So Euro yen, I had this one kind of trying to rally all the way back up again. I expected there to be a little bit of a hiccup, and it's really from where I was yesterday. It's just stuck, right? Here's the European Open, and that's exactly where we're at right now, right? I mean, literally, there's the European, right there's the 3 o'clock Open. right there. So we are trying to use the shortcuts. We're 3.6 pips. So yeah, not too much. I would say right now, if you guys know how to set alerts on this one, I would set alerts. And again, whatever system you have, you should be able to set alerts. I think setting an alert for 130.93 or 94 for a short of 31, I think is a great idea. I think setting an alert for 130.12, also about 12 pips away from another entry. I think there's an entry down here at 130.04, stop loss at 129.92 and 130.25 up top. I think they're both levels where we've had buyers come on, buyers or sellers come in either way. I do think there is going to be this one hiccup though. We've seen sellers turn this around as we spiked up, but it pushed it literally to the brink. So I'm not necessarily as worried about it. But if we get some decent basing in here and then we have a European kind of start and we're still stuck basing in here, that would be a short right back down to this equilibrium point. So it's a level, but as far as higher quality goes, again, I do like the 131. I like the 130 down here. And again, set your alerts in both directions. If price comes up, we get short. If price comes down, we go long. Again, if this, then that is kind of how we have to deal with it. Euro dollar. So euro dollar has been kind of pushing back. Now, euro dollar, we had this trade from last week. We had the Harry Potter. Let's remove these off so we can kind of get like a clean entry on them right now. There was the trap that we talked about from last week. There was the break. Again, I don't need this right now. Actually, I'll just pull this across. I'll put it right there. We're right there. I can pull these off now. I don't need those. Next trade setup we have is actually sitting a bit lower. Right there. There we go. And again, another Harry Potter trade. The reason I like it is because, again, we had some probes into it here. We kind of based and took off again. We hit it again, and now we've hit it again, and we've hit it again. So those buyers down here are going to be in diminishing supply. So we're not going to have as many as we did. As they break through the 118.32, again, we have a pretty clear run. And this is that's a 1 to 4. A 1 to 3 is actually up to here. That's a 1 to 3.3. So we have plenty of room to run. I would say, taking this down to like the 1 to 3.75 gives us a little bit more of an ability. But with the European data later this week, I think this is a great one. I think we have dollar help. Friday's a good day for this one as well. But I think overall, by the end of the week, if we have the continued path we do, I think we come down and we test these 117.80 levels, or at least the 118. 118 is sitting right down here, right? And you can see, looking to the left, if we can break through, there's not really a whole lot stopping us. And then once we get to the 118 mark, again, it becomes a psychological kind of battle back and forth again. Are we above or are we below 118? All right. Pound yen. So pound yen is pretty boring. Right now, it's moved 1 pip in 24 hours. You can see all the pressure down at 8 o'clock, turned and rolled back up again. And, there was a small area here, but nothing really great. You can see that it did actually base inside of that same level. We probably don't need it because, again, we're pulling levels that are a bit lower. Trying to find, there's just not a lot that's great in this one. There's a small level of basing here that you can see that price has touched and kind of went off of. That's probably the next level that we look for some basing at. But right now, we're kind of wedged in between, sellers. And again, you guys can see that the chart turns pink here. We're really in an area where we want to be looking for shorts more than anything else. As that upper reaches of the curve right now, on pound yen should be moving a lot more than it actually is right now. It is for those for my students, they know what this means, but it is in a downtrend setup right now, right? On the larger time frames, it's more sideways than anything else, so it's kind of stuck. So I would say that, again, all the indicators are matching that we should be looking to get short this position, okay? Without any real lack of news, any real news, though, it's kind of hard to just say, yep, get into this one, love it, I think it's great. We just, kind of in an odd position. And like I said, this has been pretty sloppy for a pair that moves as much as it has the potential to move. Kind of hard to really talk about that one and get much out of it. Pound dollar. So pound dollar last week, you guys can see that we had that level up there, 138. We ended up tagging it. Really, the opposing side is all the way down here. You You can see it's at 136. So, I mean, it's quite a ways away. We do have an area of interest where we've hit it, and we based in it, and then we popped and kind of tested it again. I think overall, that's kind of our downside target would be this 137.41. With the pound yen being an area where we're looking for shorts, you can see that this one is kind of more in that no man's land. It's just inside of the blue area. And again, we're kind of low on this curve here. And again, it's not necessarily that we have a lot of dollar strength, but it's been more pound weakness than anything else. I think it's at a stage where, right now, I don't really see great momentum. This area of interest, I don't really need it now. It's chopped through enough that we're not really there. There's not really been great pullbacks. I would say I don't even really have anything great. I mean, there's a little level here, but I just think we wait. I think we show patience in this one and wait for it to come back up. So, um, yeah, I just don't. There's just not a lot there. Yeah, I just don't have. Like, I'm trying to think. I mean, and I don't even really love this level that much. I mean, it's okay. It's all right, but it's not like, oh, I can't wait to go long from that level. How far do we have to move for that? It's about 50 pips. So, yeah, we kind of got some time. Unfortunately, I don't really have a great setup. I think we wait top or bottom. And again, there may be something finicky around this level, 137.42. Maybe European session open. Let me see. Do we have. Yeah, probably tomorrow morning would be the best. So, with that monetary policy, if we can actually run down, if we can push down into this level, it could be a level you take pre-news. And again, what I'd recommend on doing on that one, if you're looking to take it pre, I would say check it out with binaries, and you may actually want to use the 7 a.m. binaries. I know we typically talk about shorter duration, and the reason I say is using the 7 a.m. is because it kind of removes the U.S. from the equation. It's a way for you to play, more or less just the pound itself. And if you get it, if you get the expiration at 7, I mean, some people are like, why 7? Why not 11? Well, because then you're taking on the US trader. And again, you could be up in the position and have it reverse and roll back on you. And that's kind of where you run into some problems with it. So again, using those kind of off time, binary contracts, I think are, some of the better ones to take, right? Again, maybe you can catch a call spread or something like that in the morning as well. Now, dollar CAD has been just going crazy. So dollar CAD, we actually had an area of interest and we were looking for Harry Potter. We don't have the trigger for the Harry Potter yet. We've been looking for it to go long. It was a break of this 126.37. Levels where we're really looking at short is probably, again, a speed bump here. Price hit up and then just got hammered to the downside. So I'm expecting there to be some sellers stepping in at 126.90. And then again, we do have a level up top. We've drawn it for a while. It got front run in the past up at 127.20. So, this position is moving. And again, with the CAD up this much, that's why oil is kind of getting, is down as much as it is, down in the 68 range. CAD having news this week is, definitely something that's been interesting. Here's everything for tomorrow morning. The BOC statement is going to be big for the CAD. If they mention anything about conditions are expecting to continue, we're going to do tapering. We may start raising interest rates. This thing turns and reverses all the way back down again. So it could technically be a big morning, but right now we're 20 hours ahead of what the news is. We don't necessarily have a level, and again, we are if we cannot break through, look for a retracement because today, at least since the European Open, this is a mover of about 101 pips in one session. That's a lot. That's a lot. So I would say, again, look for this potential long on the near term. And again, if we're unable to kind of break through, look for a reversal back again. Again, this is a decent mover with targets much, much lower down here at 125.36. Okay. Dollar Swiss. Dollar Swiss also big. We got a little area right above. We're not quite there yet. This was coming in at 91.98. It's a level we've had up there for a while. Right now, it's kind of stuck in this little hiccup, right? It's stuck in that little hiccup right now. We'll see if they can hold it or not. Right now, we have a lower high, right? We had to push up. We had to pull down. We had a lower high put in, and we're kind of there right now. We'll see what it does when it closes in 10 minutes, but not ideal for the dollar Swiss. And again, 7 o'clock was really when the U.S. money came in hard on this one. I would expect a reversal. I would like it at 91.98. I don't know if we're going to get an opportunity if it's going to get up that high. If it's going to be able to punch through, but if it does, then yeah, looking for this rollover back down again, pushing down into this 91.71 level. Okay, dollar yen. So dollar yen. As you can see, we had this position, dollar yen kind of came across, it hit and went back down. Didn't quite make it all the way, but that was over the weekend. So again, kind of one of those trades that like, did we keep it over the weekend? Oops. Most times the answer is no. We're not interested in taking it. And you can see it came back up and based, came up, came down, and went higher. So I would say right now I'm really looking for this one to be kind of similar to what we saw with the dollar Swiss. I'm looking for a push higher, and there's two kind of levels over here that we could take this from. I think the 110.31 is really the best level. It's where we really saw the basing, and it kind of front runs that 110.36 level. Um, as far as buys go, I think the best buy is still down here at 109.47. Again, we do have it listed as a target. We haven't been able to get back there, and really nothing in here signifies like amazing buys. I know there's a small level of basing here, and it did kind of come up and base and come back again, and it used that area of interest at 109.90. It's all right. I don't know. It's all right. I mean, if you wanted to get really aggressive with something, you could put probably a small level in, probably right in here. And again, it coincides with that area of interest, but that's more just the retest of this old level. So I don't know. I mean, I guess if we get the right entry, let's see, how far is it? It's about 40 pips down. So, we could use. I mean, we'll use the. We're going to use this kind of one here. Your 1 to 3 looks something along those lines. So as long as it comes up and starts to roll, you got plenty of room to run that one back down to 109 or 110. I mean, 110, the whole number is sitting right here at 110. Right there. So you got room to run. I'm just afraid that this one is going to kind of suffer before it gets that high, right? I feel like it's setting up already for kind of the reversal before we get there. All right, let's go across and look at the commodities because they have been moving. So here's what we had. This one we talked about with Todd. We talked about, kind of a reversal. That's what we have right now. I wouldn't say that the reversal has been great. It's kind of like, at this point, it's more or less an inside day. Let me take this to 1430, turn it orange. So, yeah, I mean, it did push back up. It didn't make it all the way back up again, and it's kind of stuck. Like I said, all the monetary policy statements this week will definitely be something that, will be helpful for oil. Seeing what central banks are looking for. Like, is it good? Is it bad? Is demand there? Is it not there? I would say as far as today goes, it doesn't look like it wants to rally all back up again. Remember, inventory is not tomorrow. It's Thursday. There will probably be some movement tonight, but it's going to be European session move. Excuse me. I would aggressively watch the 68.95. That's where we talked price getting back up to this morning. We got the little kind of aggressive level up top, right? We got this kind of little aggressive level at 69.23. We do have buyers down here at 67.06 and 68. So let me see right now. Oh, actually, I guess I don't need those. Let's do this. Let's do this. Let's do this. They haven't given us a forecast yet. Let me see. Has API put theirs up? No, I don't have the new one yet. So yeah, it looks like the forecast is not up yet. And I was curious to see what are they saying, because remember, last week was a huge miss, right? This week's probably not going to be as big, but I'm curious to see where they put it at. If they talk about a down draw of 3 mil or 3.5, I think both could be interesting. But anyway, 67.06, 66.87 on the bottom, and again 69 up top. Now gold. Talked earlier in the day's talk about how 1800 is a big psychological level. You can see it literally sliced through at the 10 o'clock window. It kind of pulled back into that area of interest, and again, kind of gave us that same old Harry Potter, right? Push down, we pulled back up again, and then we collapsed. That's what it did. Since it hit that 10 o'clock time frame, it's just chopping back and forth in that window. 1800 is going to be huge for the media because they're going to be like, oh, we're back under 1800 again, back under 1800. But I do think a lot of this positioning this week, any negatives we see, I think are great opportunities for us to be able to try to get long on this one. I doubt we can get down to this far. That would be quite a big drop. It'd be like a $20 drop to the downside. I'd kind of like to see a little bit of a rally up so we could put a new level in here and be like, hey, listen, look, there's a level right there, right? I think it's decent. I do think gold is going to have some opportunity this week. PPI in particular, I think talking about this data on Friday, I think is a ripe opportunity to figure out how to get long gold. Hopefully, Hopefully, it doesn't take off in the European session and go higher in anticipation for that to be high there. But I do feel like everybody talking about what inflation is and like, are we going to need to curb inflation? I think gold this week, when we get these pullbacks, I think we should be looking to find gold opportunities this week. Particularly, again, I think the epitome, like the greatest opportunity, is going to be Friday at that PPI number. So watch out for gold that way. And like I said, whenever gold is above silver, it tells you that there's definitely probably some political maneuvering, right? Not political, but I guess financial maneuvering with the cost of gold. And you can see there's not, even on the 30-minute, we don't really have any great levels until we get back down to the 1771. So I'd say watch it. It's got some room to run. If we can get down to 1771 on Friday, yeah, I'd be all over, a long position here. Okay. And silver. So silver's close. This is really just doing a parabolic retracement. We had that parabolic move last week, bounced through it a few times. It's it's well past its 1 to 3. It's 1 to 3 from this level would have been there. So you can see, here's the Sunday gap, and it came back up and grabbed it, and then just after that time, just has continued to push lower. So, I do think the area down here a little bit lower at 2406. 24 is an old level that we had talked about for a while. We had on there for a while. 2509 is our top side, and then again, that 24 level. There's a strong push off of this. You gotta say, hey, listen, there was something in there with some backstops down here. Could we get down to this level? 2405. Again, it's something we've talked about in the past many times. For Friday for PMI, I think this one is also a valid entry, right? Something to go long from. And then last but not least, look at this. Looks like all the Bitcoins, Ethereums are all down 10. GMC is down. Dogecoin is down 15. Natural gas is red. That's what we'd love to see. Let's just go all the way down. Keep going. Not that I'm happy about $4.46, but yeah, I'm happy that this came down. Now, there was a small trade here this morning. You could have taken at the 9 o'clock window. You can see that we had movement there. Actually, right there. If you wanted to get aggressive, you could say it right there. Either way, it hit. And a nice rollover. I do have an area marked here. And again, this area should be more there. Looking for a break. Now, I would say that if you guys are natural gas traders and you do like natural gas is kind of set up. And again, we'd have to adjust it kind of more locally at this point, probably more to that. But this is a 1 to 3 right there. Okay. Like this one coming down. I hope that it stays negative. I want it to go back down to $2. But $4.46 I think is decent. It's better than what it was anyway. But again, that's the last area we had major buyers coming into the market. Now, remember, this is also on Thursday, but it gets bumped. It's at, where is it? Right here. Natural gas is at 10:30, and then crude oil is at 11 o'clock. So it's kind of a bam number. A lot of times crude oil steals a lot of the thunder on that one. But natural gas has been extremely volatile pretty much every day. I mean, it's down 2.9% today. Again, those percentage moves have been great, and there was that small kind of trade you could have taken this morning. So, but yeah, we're looking for a break right now. If we can get a break much lower, a break of $4.55, do look for that to drop to the downside. So. All right, that is pretty much everything in here. TLT also negative. Bonds are getting kind of hammered over here. You're seeing the dollar. Again, the dollar is rising. It's coming back to an area right now, though. If I move this old area of interest up, you can see that right there is the last time that it was tested. We're kind of in that same specter right now. So it's there. We got a lot going on. I think this week, as I said, there's a lot of monetary policy reports. I think, we take this one at a big glance, apply the filter. Let me go back to Monday. I'll just go to Tuesday. You can see RBA statement, bank statement right here, monetary policy, press conference, Macklin speaking, and then unemployment, and then PPI. A lot of stuff this week, guys, on the radar. Again, a lot of these too. Look for these shorter duration binary contracts. Look for the session opens, but there's a lot of opportunity this week. So please make sure you look out there. If you're not looking at currencies, look at currencies. Definitely go over into gold. All of these could also be triggers for gold, and see if we're approaching little small 30-minute levels. So with that said, that is going to be it for today. Make sure you guys mark your calendar off Tuesday, September 14th. And then also don't forget to mark your calendars for Tuesday, September 21st. It's the next Education Summit. And again, I'll be going on at 11 o'clock that week, not 12 o'clock. So if you have any questions for me, you guys are more than welcome to email me, support@keeptradingsimple.com. I do apologize. There were a few people last week that emailed me, and I just literally found that they got sucked into a spam folder. So if I don't respond, it's nothing you guys said. Just, if you've written me something and I haven't responded in like 48 hours, do me a favor, send me the email again. It may have gotten sucked into a spam folder, and I try to check it, but sometimes I do miss checking that folder on a daily basis. So again, support@keeptradingsimple.com. And if you have any questions for Nadex, you guys know how to reach them as well. With that said, I'll catch you guys. Thank you so much for joining. And again, I'll see you guys in the morning on YouTube for the morning analysis.